The source of the information that we'll be talking about today are all attached to today's invite along with today's slides. And as Heather mentioned, we are recording this session, so those who are unable to attend can watch it at a later date. We will continue to share information and resources as they become available, and we ask you to do the same. These regulations changes impact all federal agencies that give grants. So like I mentioned, we are all learning together. Next slide, please. For your awareness, we walk through the same information with our tribal partners as well as our Region 7 project officers in the past few weeks. Today's session will be recorded, as I mentioned, and can be shared with those who are unable to attend today. Our plan is to complete awards prior to the end of this fiscal year, as many as we can. This allows us ample time to get the necessary policy updates and implementation guidance from the Office of Grants and Debarment. This will allow us to get a good handle on how our agreements will be impacted once this information is received, and allow us to have productive conversations with our partners to determine the best paths forward for our FY25 agreements. Our commitment is to continue to provide our partners with all the information we have as it's received, so everyone can make informed decisions on workload prioritization at this time. I'm going to walk through a high-level overview of the updates to 2 CFR 200, then turn it over to Heather so she can walk through an overview of the anticipated changes to the interim general budget development guidance for applicants and recipients of EPA financial assistance document, which is based on 2 CFR 200, and point out the updates that we anticipate. So let's go ahead and dive in. To help stakeholders better understand the guidance and create consistency, changes have been made to definitions, acronyms, and wording to be more clear and concise, such as cost sharing or matching is now only cost sharing. Matching has been removed. Federal award agency is now only federal agency. For-profit organization is now included within private entity. Non-federal entity is now referred to as recipient and or subrecipient. There was removal and addition of acronyms, defined new terms, and revised a few existing key term definitions. Next slide, please. Some examples of notable changes that will have significant effects on operation, which are designed to create clarity and reduce burden for both external and internal stakeholders, include for program income, which is in 2 CFR 200.307. This now includes 3 methods of applying program income with examples. In procurement by states is now procurement by states and Indian tribes, and allows Indian tribes to follow their own procurement policies and procedures if in place. Entertainment costs is now titled Entertainment and Prizes and includes guidance on prizes. All right, next slide, please. Significant changes which will impact operations to both external and internal stakeholders include notice of funding opportunities, which we refer to as NOFOs. In 200.204 includes new requirements for NOFOs outlined in the citation, as well as in Appendix 1 to CFR 200. For performance management, this section adds new requirements on both the agency and recipients to help facilitate the measurement of specific data points. Within financial reporting, this now provides explicit dates for requiring financial reports from recipients and subrecipients. Monitoring and reporting program performance includes a new clause on responsibilities of recipients and subrecipients on when and what to report. For fixed amount subawards, this has been expanded to include several new changes that impact not only the threshold, but funds retention and award reduction. And then for termination, this section adds a new provision for discretionary termination. Next slide, please. All of the revisions to 2 CFR 200 impact our operations, but due to the nature of grant work, some will have a greater impact on our daily operations, such as within 200.1, the definition of modified direct total direct costs, MTDC, which we refer to it as, has stayed the same, but subawards can be counted in a recipient's base up to $50,000 per subaward, regardless of the period of performance. In 200.414, this is now just indirect cost and has had a major overhaul, which includes new provisions and thresholds changing, threshold changes, which I'll cover in more detail in the following slide. For closeout, this has been revised to include new language around indirect costs and final financial reporting. For equipment, this has been revised to include new responsibilities for recipients and subrecipients, retention provisions, and property clarifications. For supplies, this contains not only new definitions, but now provides a clause on compensation. Okay, the following changes will directly impact budgets and are pretty straightforward. Equipment threshold has increased from 5,000 to 10,000. Residual inventory of unused supplies has increased from 5,000 to 10,000, as well as expanding the definition within 200.314. 200.333 adds recipients may provide fixed amount subawards up to $500,000. The de minimis rate for indirect costs has been increased from 10% to 15%. And then the threshold for single audit requirements has been raised from $750,000 to $1 million. I know I just went through a lot of information and you might be a little overwhelmed, and that's okay. So I'm going to ask the question that my grandma used to ask me when I was faced with tasks too big to accomplish. I thought that were too big to accomplish, and that was, how do you eat an elephant? Which at the time, my 10-year-old self thought was horribly inappropriate. But once I realized it was more of a philosophical question as opposed to a literal one, I quickly grew to appreciate it and often pose this question to myself and others in times such as this. So, how do we eat this elephant? That's right, one bite at a time. And that's exactly what Heather's going to do now. I have no doubt she's going to do a fantastic job of summarizing over 450 pages of the red line text into something practical for you all to ponder by walking through the anticipated changes to our interim general budget development guidance for applicants and recipients of EPA financial assistance, which you should all have bookmarked and be familiar with. We will be sure to it was attached to the meeting invite, but for those who do not have that at their fingertips, I will put it in the chat. So go ahead, Heather, take it away.
Thanks, Whitney. I think I failed to introduce myself at the beginning, so for that I apologize. My name is Heather Duncan, and I serve as one of the grant specialists here in Region 7. Some of you know me from a prior role as a project officer. I've also served as a project officer in several EPA programs here in Region 7. What we're going to do today is walk through our general budget development guidance as it currently exists. So if you go to our website and you download this document, you're going to see exactly what we're going to go through today. If you're not already using this as a resource, I would encourage you to do so. This document is nearly verbatim to the guidance that we use internally, called the internal cost review guidance for project officers and grant specialists, to review your applications, your work plans, your budget narratives when they come in. So you are working off the exact same guidance document we are working off of as we review your package. So this can be a super helpful resource when you're trying to compare notes with your project officer, receiving feedback, or needing to tweak something to bring it into compliance. The only thing that's different about this document is that you have the added benefit of a couple of editorial comments and anticipated changes. And you'll notice that there is kind of a legend up in the upper left-hand corner of the first page that details what you should expect on this document. The comments in a gray are my comments. Basically, they're pulled from other EPA guidance documents and maybe explain a little more of the deeper why EPA is requesting certain detail in those areas, or what it is that we're really getting at or looking for by requiring that in a work plan and budget narrative. And then in the red, you will notice that we have tried our best to catch the places that we would anticipate this guidance to shift come October. Headquarters is working fast and furious to get this document updated. I know it's one of the top ones on their list to update. And so you get a little bit of a preview as to what we might expect to shift and where you might see those shifts in the guidance document. If I haven't said it already, this is one of my favorite EPA guidance documents, and I think it's because we actually did this one right. Number one, the table of contents is cross-linked, which means if I click on a section, I'm just going to click on one here, personnel and fringe benefits, it goes straight to the personnel and fringe benefits section. And so it's really set up well to pull up exactly what you need at the time you need it. It's not one of the guidance documents you have to memorize all 42, 46 pages of. You can use it as a continual resource, and that's how we use it here. The other thing I really like about it is that it breaks it down in terms of the same categories that we use on the SF424A and in your budget narratives. And so we have the section on factors to consider for all cost categories. And then we have specific sections for personnel and fringe benefits. We have a specific section for travel, for equipment, for supplies, for contractual, for construction. That's a new section in the past couple of years for EPA. And then for other, and also for indirect costs. That's particularly helpful because oftentimes the questions we're asking are not broad and general. The questions that you're trying to get answered are not broad and general. They're usually specific to a particular category or how to capture something that you're trying to work into your budget narrative or your work plan. And so you can go right to the section that you need because it's set up that way. Things where, and we'll get to some examples in a little bit, things that would play off of each other. So for instance, the difference between supplies and equipment, you'll see the guidance in both sections, because if you start in supplies and do your reasoning there and it kicks you to equipment, that's great. If you start in equipment and you do your reasoning there and it kicks you to supplies, that's great too. Either way, you're going to get where you need to go. Headquarters has done a fantastic job with this document, which is why we're using it for today's training. So I'm going to go ahead and skip over the fantastic table of contents and get straight into the nitty-gritty. Again, as we get into the document, you're going to notice all those notations I talked about, those gray comments that give a little more context. I've pre-highlighted things for you, big points that we typically run into or that are important for us to all keep in mind. And then you'll see a few red comments here and there as we get into it. First and foremost, EPA conducts pre-award cost reviews for all assistance agreements we give out. Except for those on a fixed amount basis. I'll be honest, as of right now, we don't do a lot of those grants in Region 7. So you can assure yourself that both the PO and the grant specialist will do a cost review of your proposal, of your application before it is awarded. Our goal is to set you up for success, to make sure that we're catching any inconsistencies or things that need a little bit more written justification, so that everything is well documented and that when that award hits your inbox, you are ready and set up for success going forward. One thing you may not know about how we do that review in Region 7 is that we look at it with slightly different lenses. Most of you deal primarily with the project officer. They are specific to a program at EPA Region 7, usually have a particular technical expertise and learn the grant regs on the side, basically. Their lens that they are looking at your budget and work plan with is specific to that technical expertise, the specifics of that particular project or program that you are applying under. The grant specialist, on the other hand, has an organizational risk lens that we apply to it. We are looking to make sure that things look consistent with policies and procedures, both for your organization, but also for consistencies with EPA guidance. We're also looking to make sure that decisions made between you and the PO are documented in writing. We want to make sure that the file tells the same story as the good work that you guys are going to do once the award is made. I continue to scroll down. You have a copy of this marked up document as part of the attachments for this meeting, so I won't be covering all of them. We'll just hopefully be hitting some of the highlights. So we're getting into my favorite section of this document, my favorite section of my favorite document, the factors to consider for all cost categories. This means that regardless of whether we're looking at personnel costs or costs that would fall under other, whether we're looking at construction or whether we're looking at contractual, these factors are going to apply to our analysis each and every time. And we're trying to be, again, you're working off the same guidance document we are in making those determinations. And so you have insight into what the types of questions we'll be asking as we're reviewing your packages. The big four terms come straight out of 2 CFR 200, specifically section 403. We're looking to make sure that the costs that you have proposed for your program or project are necessary. And the way that we determine that they are necessary is to think of 4 different factors. The first factor is whether they are eligible. And this is just if they are permitted by statute, program guidance, or regulations. Does EPA have the authority from Congress to do this work? And does it translate into authority that's given, that we can give out through the means of a grant? The second category is reasonable. And this is what we call the prudent person test. If we have the same information you do when you're making that decision, would we as a prudent person have made the same decision? That's what it means for something to be a reasonable cost. We do not want it to exceed what a prudent person would do under the same circumstances, the same information available to them at the time the decision was made. The third factor is allocable. And this one gets a little tricky sometimes, especially for those of you who manage multiple grants with us here at EPA. Allocable means that the costs that are proposed under that particular grant or program are proportional to the benefits incurred by that project or program. In other words, if I am an employee of a state agency and half of my time is paid for under my state's PPG and the other half is paid for under a standalone 319 grant, let's call it that, then I need to make sure that my costs are allocable in those same proportions, that the work that I do for the PPG is charged to the PPG, and the work that I do for the 319 standalone grant is charged to the 319 grant. Likewise, some of the other things that we would think of as potential direct costs to the grant, things like my cell phone, or things like supplies that I use, should also be allocable to the appropriate program. This is usually pretty straightforward. You guys have excellent policies and procedures in place to guide this. We do not run into a lot of issues with you on allocability, but it is something we need to keep in mind. It gets complex when you as a recipient have multiple sources of funding and have to track those direct costs directly to those proportions and to charge the actual amounts to the grants. And so please, on our behalf, thank your fiscal office because they do a fantastic job. Again, we don't run into a lot of issues with that. Everything we just talked about, again, is captured in this guidance. I was kind of going off of memory up top, but notice that some of those examples that we're talking about as examples of direct costs are listed in the guidance document. It's intended to prompt the thought process to make sure that we've got it categorized correctly and documented and justified correctly. That fourth element that I mentioned, there's been the other 3. The fourth one is allowable. So allowability basically means that it's not unallowed by 2 CFR 200. The obvious example that we like to use is alcohol. Alcohol is never able to be funded by a federal funding. It gets nitty gritty to the point where even if you are proposing to cover the cost of a meal under the meals and light refreshments guidance document, that's another whole story. But if you're proposing a meal and alcohol is present, we usually will not pay for that meal. We avoid alcohol. We also don't allow you to earn interest on federal funds. We also don't allow lobbying and litigation to happen with federal funds. Your grant specialist, because those get into kind of an overarching policies, procedures lens, your POs may recognize those situations, but your grant specialist is really going to be the one to notice those things and help you address those if they end up applying to your grant. So those are the big 4. There are other categories of things that apply to all cost categories. One is prior approval of costs. And you're going to notice this is one of our first lines of red text here. There are some items that are being removed from EPA's list of the costs requiring prior approval for awards issued on or after October 1st. That means, and I want to be clear about that deadline, if we are working on your funding right now and the award date on page 1 of that PDF that you receive from EPA Region 7, that award mailing, if that award date is on or before September 30th, 2024, you are going to continue to implement the current 2 CFR 200 regulations for that award. And likewise, this guidance document will be your guide. If that award date has October 1st, 2024 or later, you will be using the new 2 CFR 200, and you will be using the guidance document that will supersede this one for that. It's very possible. What that means is it's very possible that we both will be working under 2 versions of 2 CFR 200 for a short period of time while we close out the grants that we issued under the current 2 CFR 200 until the time where we're only issuing and managing active grants under the new 2 CFR 200. And so it's going to be important for you all just to keep that in mind. The only way that an award that you currently have going now or that would be awarded before September 30th would move to the new 2 CFR 200 would be if we add money. So it's either a new award or we add supplemental money to the award that you have now. It has to be a monetary amendment that would trigger that. And what would happen in those instances is that monetary amendment would basically say that any money not spent as of the amendment and the new money going forward would be subject to the new regs, the new terms and conditions. And honestly, that's where you're going to recognize which 2 CFR 200 you should be working off of. Your terms and conditions are always your guide. They are specific to the grant. They are specific to the money that EPA places on your grant. And they are fantastic guides as far as where you should look for your answers. And so just recognize that prior approvals are going to be one of those things where you're going to have to be very clear about which 2 CFR 200 you're working under. So some of the items that we expect to come off the list of prior approval, things you have to ask for now as prior approval that will not require prior approval from EPA, include participant support costs, memberships and subscriptions, and entertainment costs. The entire intent of removing those is to reduce burden. It's intended that you have the systems and policies in place to be able to assess whether those costs are reasonable and allocable and allowable and necessary for your grant without having to check with EPA first. It doesn't mean you can't check with us. It just means you don't have to check with us. There are some items that will remain on that list. Things like advertising and public relations, things like fundraising, things like meals and light refreshments. And those of you who are savvy know that there's a little bit of a difference for those of you who operate continuing environmental programs. Those types of items have significant details captured in other parts of this document that note it as a prior approval item. Equipment is another one that requires EPA prior approval. The good news is that most of our prior approval situations are things that you anticipate, things that you already know you're hoping to do, equipment you're hoping to upgrade with this new grant cycle. And so you work it into your scope of work, your work plan, and your budget narrative when you submit that proposal to us. And so as part of that approval process, as part of signing the award, we basically take care of that prior approval requirement. The only time we run into it is when we run into post-award changes, items that come up after the award is issued, those times where life happens, weather happens, equipment breaks, and you just can't anticipate it. And you call your project officer and say, okay, so we're going to need to rebudget, we're going to need to rethink things. That conversation can be documented as prior approval. But here's the kicker, and it's right at the top of page 6. Technically speaking, it's not your project officers that have the authority to provide that prior approval. Certainly, they need to weigh in as far as whether those costs make sense from that technical standpoint, make sense for the program or the project that you're implementing. But ultimately, they need to get in touch with their grant specialist. And then we will work with Whitney to make sure that the grants office is the one who issues that prior approval, because it is indeed Whitney who has the authority to do so. The next category that covers all cost categories are pre-award costs. And this can sometimes be a little bit confusing. And so I want to make sure that we take the time to define what pre-award costs are before we talk about how they apply. Pre-award costs are the difference in the date where the grant starts, the period of performance, the start date for the budget and project period, and the award date. So in some cases, and I think you guys probably see this more than most of our recipients, those of you who run continuing environmental programs, you are in the time of year where you are submitting your applications to us for the grants that will start on or after 10/1/24. You're already anticipating the federal fiscal year 2025. We all have lived with the reality that for at least the 17 years I've been with the federal government, Congress has not had a budget to EPA by October 1st. And so we often operate under a continuing resolution for several months until Congress has those funding bills in place. And so the costs incurred, sometimes we don't have those awards out right away on October 1st because the funding isn't ready yet. And so, but we allow you to start work on October 1st as if it were. Technically, that's at your own risk but it's a measured risk, right? You know, we're usually pretty good for it. And so the difference between that start date of the grant and the time where we actually get that first line of funding out and you have an award document in your hand, those are pre-award costs. The difference between the start date of the period of performance and the award date is your pre-award cost. In order to be authorized for pre-award cost, it does require a special term and condition to be added to your grant. Usually you will find this as an administrative term and condition, and we will specify specifically the date that you can start to incur costs on that grant. Usually we will do that in consultation with you. Either we will know that it's already reflected in your work plan and that you are planning to start work on that date, or we will have your project officer make sure that we understand what items on your work plan you are starting on that date and what date you started on them. And so we'll make sure that that term and condition reflects the reality that you're working under. Again, our goal is to set you up for success. Cost share, everybody's favorite, and one that is increasing in conversations. Some big things to remember when we talk about cost share. Absent authorities provided by other federal statutes, you may not use federal funds to meet cost share requirements. I say that knowing that there are a couple of big exceptions. Some programs make use of community block development grants or funds from USDA Rural Development. They have specific authorizations as part of those federal statutes that allow those funds to be used as match for other federal funds. And so we can add that documentation to the file and therefore authorize those funds to count towards the cost share requirement that you have. Other federal funds that don't have those provisions as part of those federal statutes cannot be used as match for your EPA funds. We do expect that the cost share that you come up with will be categorized in the appropriate budget cost category, because we have to do the same analysis for your cost share to confirm that it is reasonable and allowable and necessary and allocable. All those same factors come into play for your cost share as they do for the federal money that we are putting on your award. You do have the ability to document volunteer services as cost share. It requires a little bit of paperwork to make sure that you're coming up with a fair market value for those. And we can help you with that if that's something that you start to go down the road of. But again, those same costs are going to be analyzed to make sure that they are reasonable and necessary for the grant. One thing you will notice in our competitive grants going forward, you are going to notice a total rehaul of our NOFOs for competitive grants. Basically, we're trying to make them shorter and easier to read. And we could go into an hour-long webinar just on that if we wanted to. One thing you will notice differently about how we grade those is there have been a handful of programs where we have used voluntary cost share as a factor for grading or judging the applications that come in. OMB has said as part of this revision of 2 CFR 200 that they are discouraging voluntary cost share as a factor. Voluntary cost share, the best way to describe it is match above and beyond what's required. So if the program requires $0 of match and the proposal writer is proposing 10%, all of that is voluntary cost share. If the requirement is 20% match and they propose 20.01, 0.01% of that is, or 0.01% of that is voluntary cost share. In most cases, we will work with you who operate continuing environmental programs to make sure that you are only held accountable to the required cost share. We will work with you to remove voluntary cost share from your proposals unless there's a really good reason to leave it in. Maybe you're needing EPA to put it in writing so that the local community who promised it actually materializes that match. We can have that conversation on a case-by-case basis and work that in. What we don't want to run into is where we lock it into a document and then you're stuck providing it because that was the legal agreement if it doesn't materialize. That's exactly what happens with these competitive recipients. If they propose it and that's part of the factor that gets them selected, they're held to it. Because if they didn't materialize that match, then now we could start to ask the question, well, would we have selected them competitively if they hadn't offered it on the get-go? And so they're held to producing that match, even if it's not from the original source. The replacement source still needs to meet all of the requirements of this guidance. Still has to be an eligible source and still has to be put towards things that are reasonable and necessary for the project or program that it's implementing. Voluntary cost share gets very tricky. Again, for your continuing environmental programs, we discourage you from putting it in your grant proposals at all. In fact, we will work with you to remove it if we see it there. For the competitive grants going forward, we are discouraging programs to use that because of all the complexities we just talked through. I am going to take a moment to talk about in-kind assistance. This is something that we have seen a few of you take advantage of in recent grant cycles. And it helps just to know that guidance on how to handle this is indeed in this guidance document for you. You don't have to have it all memorized. You can come right back to it when you need it. EPA in-kind assistance is basically goods or services in lieu of some of the federal funding we were going to provide you. In reality, what that looks like in most cases is that you have opted into a contract that EPA holds, and we are moving some of the funding that we would have put on your grant vehicle into that contract on your behalf instead. It would still be reflected on your award document. It just would not be actually part of the money that ends up in your ASAP account because we will automatically move it into that contract vehicle. I think that's the big thing in this. There's a lot more details. Oh, here's the other part I was wanting to cover. EPA in-kind costs will be included in your SF424A and in your budget narrative in the appropriate cost category. So just make sure you still include it in your budget and budget narratives. They still have to, we're still putting funds towards something that applies to your program or project. And so we want it reflected there. It's reflected a little bit differently on the 424. The application form, there's a separate line for in-kind. And so you can signal it there. Sometimes these opportunities are identified after you submit your applications, and we can help navigate that within our system as well. We have the email documentation usually at that point to do so, or can take the call notes and email them out. Again, we can create the written documentation. If it's not in writing, it doesn't happen. That's kind of our name of the game when it comes to federal funding and the way that we keep our files here at EPA. I'm going to go ahead and skip over Intergovernmental Personnel Act assignments. These are rare. They do happen occasionally. And if they do, you have the main things there to support you. We are almost to the end of the section on all cost categories. And when we get there, I will certainly open up for questions for folks who may be raising their hand. So continue to throw things in the chat or keep your questions handy. We'll take a break between each section to answer those. If you have budget revisions that are necessary due to miscategorization, we will work with you on it. We can submit a revised version of the 424A, a budget narrative, whatever other budget-related document is consistent with documenting that. That is what we call pen and ink changes now. Those of you who have been around for a while remember the pen and ink changes line that we used to use. That was back when we actually submitted paper documents for the applications. You submitted them usually in 2 or 3 part. And so then the PO had one, the grants office had one, and then we had a third copy. We would quite literally take a pen and note the changes that we would talk over the phone with you about, or, you know, in those early years, document by email. In an electronic record keeping universe, which is what EPA is under now, and so are many of you, email is considered to be a low burden way to communicate about revisions. And so revising those forms is not as burdensome. We do not need you to submit those revised copies through grants.gov. Submitting them by email is more than enough. The only things you need to submit to grants.gov are when you are applying for additional money. So that's either going to be new applications for a new grant award or supplemental funds to add to an existing grant award. For all your other changes, your no cost extensions, for revisions to budget documents or to your work plan, email is a-okay, both with us and with your project officers. The one thing I will note about these types of revisions, do not doubt the amount of time we will spend chasing mathematical errors. We realize that in most cases, it's not your fault. It's probably a weird rounding error that was generated by an Excel document 2 versions ago. But we do need to make sure that those are corrected on the front side, because again, we want to make sure that those award documents reflect the reality going forward so that you're set up for success. Likewise, and we can all laugh about this together, EPA's grant system cannot handle cents. It can only handle whole dollar amounts, which is why if you happen to submit an application with dollars and cents, your POs will spend the time, and so will your grant specialists, rounding everything with you and making sure that you're okay with the direction that things rounded to make sure that it adds up to whole dollar amounts. If you would do that on the front side, it would be of great help to us. Program income. We encourage you to be creative about ways to earn program income. Program income is essentially earning money as a result of work you do on your EPA award. For some programs, this is a very normal thing. Some of you have a fee for service that comes with your program. I'm thinking of our lead-based paint programs. Have something like that. And so it's a very common thing to earn program income as part of the award. When you know that you're going to, please provide an estimate of what that will be when you submit your application package. It's going to show up on your SF424A on line 7. So that's going to be page 2 at the bottom of that budget table. And it's just an estimate. Some of the things that you can keep in mind is that there, as Whitney alluded to, the guidance allows for multiple ways to deal with program income. The way that EPA defaults to, unless you ask us for something else, is addition. So you get all of your federal funding and then program income is spent on top. The only thing that we need to keep in mind, and it's captured right here on page 11, with prior approval, recipients can use program income to meet cost share requirements. But look at the very next line. Program income, when used for cost share, can be complicated. It's because you're still on the hook for the full amount of cost share, even if your estimated amount of program income doesn't materialize. The cost share still remains required. And so it's just, there's risk involved. And so it's just something to recognize on the front side, and just recognize that there's a whole bunch more here on the section that helps you with that scenario, how to apply when that's the situation, what part of it should reflect in the cost share section of the application versus what should be reflected in the line for program income. The other thing to keep in mind is that we do need you to reflect this in your budget narrative. Often when we're dealing with program income, what we hope to see is that you have your budget for federal dollars and any appropriate match. So you'll have like the budget narrative explaining that. And then there's like a separate budget narrative, if you will, explaining what you will do with the program income. Because if you're adding it to the program, adding it to the project that's incurring it, we want to make sure that you're using that on allowable costs. And so we're going to do that check against that just to make sure that you're putting it back into the program that earned it. Let's see here. This is worth covering. The miscellaneous section is where we talk about interagency service agreements. So we'll cover it a little bit later. It's important to know how to distinguish between a subaward and a contract by 2 CFR 200 definition, by EPA guidance definition. There is also a third category that can sometimes come into play for you all as government recipients, and that is an interagency service. It's a transfer of funding between the same units of government. So state agency to state agency. is a perfect example of that, department to department. Some of the things that we will analyze are all spelled out here in the budget. How we would think through, is this truly an interagency service, or is this a subaward, or is this a contract? And I've tried to highlight a couple of the key pieces there. Before we get into personnel and fringe benefits, do you have any questions about the cost guidance that covers all cost categories? Anything I can answer for you on that? Feel free to come off mute, raise your hand, or throw it in the chat, whatever works best for you.
Heather, we don't have any questions in the chat yet.
Awesome. Okay, well, we'll keep going. Please feel free to jump in and interrupt if things come to mind. Personnel and fringe benefits. In the cost guidance, they are one big section because they are very interlinked. On our budget narratives and on the SF424A, they each have their own separate line, personnel on one section and fringe benefits on the next. Personnel covers W-2 employees, full stop. If they're a W-2 employee, they show up in personnel. This is usually tricky when we get into questions about stipends or interns or fellowships, things like that. If they're not a W-2 employee, they're probably going to show up as costs under the category other. W-2 employee is the big piece that distinguishes whether or not to put them in personnel. There are some limited instances where we issue grants where there are no personnel costs identified in the budget. Maybe everything is going 100% into contractual, or maybe this particular grant is buying a piece of equipment. I want you to know, and the document reminds us all, that even if personnel costs are not identified in the budget, you as the recipient remain responsible for all of the reporting and overseeing and management of the grant. And that EPA staff may ask for a written explanation of how that management will happen if there's not personnel costs, if there's not a budget narrative line for personnel that explains how that happens. It's A-okay if you're not charging personnel to the grant, but we still want to make sure that those things are going to happen and that there's a plan for that. When you're detailing the personnel that you are charging to a grant, we do ask that it be basically that we see your logic. We see how you got to the number you got to. And it gives you some great examples here highlighted in the red. Sometimes it's a percentage of FTE. Sometimes it's 100% of somebody. Maybe sometimes there's an hourly rate times a certain amount of hours. We're okay with all that. We can see your logic. We can see how you got to the number you got to. In the cases where you're applying for a multi-year grant, sometimes we will also see an anticipated increase, cost of living increases and things calculated into the budget. That's A-okay. Again, just show us that logic. It's A-okay to guesstimate until you get to the time, and then we can certainly revise things as reality sets in. We will always, again, review this section to make sure that what you're proposing meets the requirements for the grant, meets the needs for the program and the project. And then as grant specialists, me and my teammates will also verify that the amounts agree with the amounts specified on some of your other forms. So we're going to check that the budget narrative matches the 424A. We're going to check that your calculation of fringe benefits is based on the calculation for personnel. We're going to pull out our calculators and replicate the calculations that you all did, just to make sure that everything is up to the math requirements. And so while we're talking about fringe benefits, the most common way we see this charged is by some sort of rate, whether it's an officially negotiated rate with your cognizant agency, or whether it's some sort of estimate that you use. What is counted in your fringe benefits is unique to your organization and its policies. Know that even though you are all state government agencies, you don't all do things the same way when it comes to fringe benefits. And so it's important to make sure that your fringe benefits, number one, are only for W-2 employees, right? If they're not personnel, then they don't earn fringe benefits as part of the grant either. We want to make sure that they are consistent with how you apply fringe benefits to activities that are not federally funded. So it's the same policy that your organization is using regardless. You're not going to charge more on fringe benefits on a federal award than you would on a non-federal project. We don't run into a lot of problems that way. So you guys all do a great job. I appreciate you guys. If you do not have a negotiated fringe benefit rate with your cognizant agency, but you intend to charge fringe benefits, just show us your logic. Make a list of the benefits that are calculated. It can just be like an asterisk and some sort of footnote at the bottom of the budget narrative, or you can just add it to the fringe benefit section with the appropriate percentages off of each. We will do the math and confirm, oh yes, I see what they're doing there. We also want to make sure that it's proportional, right? So getting back to that allocability factor, the fringe benefits are allocable to the agreement based on the amount of time that those employees are spending on the grant. We're not going to pay for 30% of their FTE, but 100% of their fringe benefits throughout the year. We want to make sure it's a proportional share of fringe benefits costs that are charged to the grant. And you're going to be charging the actuals. We understand that the proposals, the applications you submit are estimates. You're going to charge the actual costs to the grant as you draw. We will kind of do like a reasonable check. We generally know what each of your fringe benefits rates are. And so if for some reason your costs change dramatically from one year to the next in your fringe benefits category, add a line in your budget narrative that explains why. A very common explanation are healthcare costs. We all understand that reality. Healthcare is just expensive and it is not getting any cheaper. And so if employees are using healthcare that comes from their checks, it is very likely that your fringe benefit rate is higher than organizations who don't charge healthcare as part of a fringe benefit. So again, if things change, just explain. That usually covers it. And if we don't see the explanation, we usually just ask. And it's usually just to fill in something that is maybe understood in our heads and we just forgot to put in writing. Any questions about personnel and fringe benefits before we move on to travel? Okay, no big changes to fringe benefits or personnel as part of 2 CFR 200. Not a lot of red in that section. Travel. Travel is for recipient employees. So those W-2 employees who travel go under the travel category. If it's people who are not W-2 employees, those travel costs are likely going to be considered participant support costs and should be placed in the other category. Travel must be necessary. There should be enough information for us to determine that the purpose of the project and the travel that's being proposed are related to one another and that the travel is necessary to carry out those purposes of the program or project. There's a great section here on what that description, what that justification, if you will, can look like. Even breaking down the types and purposes of travel and the number of trips and the destinations to the extent that you know them at the time that you're applying for the grant. If you don't have all those details yet, if it's just kind of general categories, we do have the ability to issue awards with kind of a generic term and condition, and then it will require the recipient to work with their project officer as travel comes up. Please recognize that as state agencies, you also have the flexibility to submit what is called an internal control certification. That is good for 5 years. It is basically a confirmation that your personnel and fringe benefits and travel tracking systems internally, your accounting systems, are sufficient to manage EPA and other federal grants. And so you're self-certifying your accounting system. And then with that self-certification, you get a little bit of flexibility on how we review these when they come in as grant proposals. We essentially do what is called the 10% difference calculation. We will look at what you charged in personnel and fringe benefits and travel last year, each in those categories. We'll look at personnel last year and compare it to personnel this year. And if it's not a change more than 10% in either direction, then we consider it to be okay. Likewise, we'll do the same thing for fringe benefits. Likewise, we'll do the same thing for travel. It doesn't mean that you're not justifying some of those purposes, but maybe we don't need the nitty-gritty of every trip because we recognize you're implementing continuing environmental programs. If you apply for a project grant, a competitive grant, please recognize that that internal control certification does not carry over to that. It only is applicable to your continuing environmental program grants. Travel, if it involves international travel, will require a lot of bureaucratic process. I'll just be honest. That's something that we need to be notified about as soon as you identify it, because we need to work with EPA headquarters to get those approvals in place for you to be able to take that trip. It's a complex process. It doesn't happen very often. There's not a lot of international travel that has implications on Midwestern environmental protection, but in case it comes up, just let us know as soon as you identify it so that we can start running those needs up to OIDA at headquarters, the Office of International and Tribal Affairs at headquarters. If you have tribal policies in place, follow them. If you don't, please follow the federal policies. Please recognize that you need to follow the same policies for federal travel, federally funded travel, as you would for non-federally funded travel. And generally, first class and business class transportation is not allowable unless some very specific requirements in 2 CFR 200 are met. Again, not a lot of changes to the travel section as part of the 2 CFR 200 changes, but I do want to pause there and see if there are any questions. I'm reading one from Scott in the chat for 319. So this is Clean Water Act Section 319, the non-point source program. They do a lot of voluntary types of activities. Yes, they do. Sometimes there are consultants or companies that are providing services to help voluntary management changes. The costs, because they're innovative, can be a little higher than traditional costs. Is there a way to request deviation to exceed the CFR? Scott, would you mind coming off mute and kind of talking what part of the CFR you might want to be exceeding? Is it maybe a different budget cost category than personnel or fringe benefits or travel? Is this something that maybe is coming up for us?
Yeah, it was really back to, I just didn't get it in time. It was really back into the, can you hear me?
I can, go ahead.
Okay. It was really back into the part where we were talking about allocatable and reasonable. And one of the things that we're finding is with these consultants that we're talking to and we're trying to work with, they're exceeding those 91.52 or whatever it is per hour. Is that something that we can write a request for deviation on if we can justify that?
Great question. You're asking about the consultant cap.
Yes.
And so, yeah, it's going to require a waiver at headquarters. If we're waiving a regulatory requirement, it's a waiver that has to come from headquarters and has to be submitted to OMB. And so recognize, if we're going to pursue that, that's going to take time. That is not going to be a fast answer. Generally, in my experience so far in submitting waivers on other issues, after we get all of the facts put together into a package here in Region 7, which can take a little bit of time to get everything on paper, right?
Sure.
Once we submit it to headquarters, it's about a 45-day wait to hear back. So if that's something you're wanting to pursue, it's going to take several months of lead time in order to get it in place in the time that you want it. We can certainly, it's a case specific thing. Each of those waivers, there aren't broad category waivers generally. It's something usually very specific to a particular case or a particular grant. And so those details will matter. And so those are definitely something we can work with you on a case by case basis if you think that's something that's needed.
Yeah, and I put in the chat that we would certainly counsel with grant specialist and our project officer before we went through with that process. So
absolutely. And we would probably pull in our Region 7 grants attorneys too, just to kind of help us think through those legal arguments that are involved as well. Yeah, and absolutely.
I just never did find anything really out there that said anything about that the ability was even there. So
it's true. We don't make it easy, right? Like it is an exception to the rule, and we definitely make sure we keep it that way. We don't want it to become the way of doing business, but if there's a unique instance that it makes sense, absolutely, we can at least talk through it and see what we can do.
Okay, thank you.
Yeah, you bet. One of my former lives at EPA was in the 319 program, so that was a fun one. Thanks for asking that question, Scott. Any other questions about personnel or fringe benefits or travel before we move on to equipment? Awesome. Okay. Equipment will have some changes. And so let's talk about what is first before we talk about what will be. Currently, as we're implementing the current 2 CFR 200, equipment is defined as any unit item that costs $5,000 or more. That's it. If you're buying a really cool notebook, it's got to be a cool notebook, and it costs $5,000, it's equipment. If it costs $4,999.99, it's supplies. Now, will we have questions about the reasonableness of a $5,000 notebook? Absolutely. Like, all those things still apply. But if we're trying to determine whether it goes in the equipment line item or the supplies line item, it is purely at the federal level a dollar amount analysis. $5,000 or up is in equipment. $4,999.99 or lower, it goes into supplies. When 2 CFR 200 changes for awards issued on or after October 1st of 2024, that threshold will switch to $10,000. So for awards that we are anticipating to be issued on or after October 1st, we are going to put things that cost $10,000 or more into equipment and $9,999.99 or lower in supplies. Recognize that that is a threshold change, but that is also a change in all of the equipment disposition rules, right? All of the equipment disposition will be written towards that $10,000 threshold. You have to manage equipment like equipment. You have to dispose of equipment like equipment. There are different rules for disposition of equipment than there is for disposition of supplies. And so I want to make sure that that's clear. It is purely a change in the threshold. It will become $10,000 with this change in 2 CFR 200. Recognize that you as state agencies have systems in place for a lot of this. We do allow entities that have lower thresholds that are more protective, essentially, than federal standards to implement theirs. So for instance, if there's an organization right now that has an equipment threshold as part of their accounting system of $2,000 instead of $5,000, they can tell us that as part of their budget narrative and continue to implement that threshold of $2,000 for the purposes of their grant. We're not asking them to modify their accounting system for just an equipment threshold. You just have to let us know. If your organization is going to continue to implement a $5,000 threshold, even after the federal threshold goes to $10,000, please let us know in the same way so that we can make notes of that. You can always be more protective. You have to be at least as protective. And so you can't pick a threshold of $12,000, but you can absolutely pick something less than what's required. If you are trying to decide whether equipment goes fully into the equipment category or not, I really point you to this section. So a lot of the equipment that we purchase with EPA grant dollars, I'm thinking of my time in the Clean Water Act 106 program and the monitoring probes that we would buy. Or I'm thinking when I was in the pesticides program, and I'm thinking about some of the monitoring kits and things that we would put together. If you can purchase each of the items and they're going to be itemized as something separate on an itemized invoice, or if they don't require assembly to be operational, and none of those items individually cost more than the $5,000 threshold, then they are probably supplies. If you're dealing with those situations where you're buying the probe plus a battery that you have to attach to the probe in order to make it operational in the field, and even if they're listed differently on the invoice, but it's required to be assembled in order to be operational in the way that it's intended for the project, and those two items together cost more than the $5,000 threshold, it's equipment. Accessories that I add to that beyond that level of just operational may be equipment or supplies, and they may be unique items that go either direction, right? One item is more than $5,000, and so it's equipment. One item, one of the accessories is less than $5,000, and so it's going to be supplies. It really requires some case-by-case judgments and parsing. And so if you're going to buy one of those complicated pieces of monitoring equipment or other things, please talk with your project officer about how you're anticipating those things to be invoiced, or how you're anticipating all of those things to come together. Sometimes you're buying that probe and they're assembling it all in-house. It's kind of like a pick list, like you get to order your custom computer or whatever. We're not asking you to parse it out to that level, right? If it's coming to you assembled, then that's one thing. But if you're having to assemble it, that's another. It's just very nuanced and very case by case. And so this section is your friend. This is the same section that your project officers and your grant specialists will be looking at to make sure that we're helping you in making that assessment if you're not comfortable making it on your own. One thing that is not changing, even though the threshold is changing for equipment will still require EPA prior approval. As a result, we do ask that when you're listing your items in the equipment budget of your budget narrative, we ask that it be itemized. We ask that you list each piece of equipment so that we can, number one, affirm, just like you have, that it falls on the right side of the threshold, that it belongs in equipment and not supplies. Also, that we can help make sure that we understand that you are picking a reasonable and necessary piece of equipment for the program or project that you're implementing. If you list a specific brand name of equipment, you should be giving us an idea of why. Because, and here's the deeper why. If you're giving us a specific name or piece of equipment, like a specific brand name, we're assuming you've gone through the procurement process already, and we're just going to want you to confirm that. We're going to want you to confirm that you've followed your procurement procedures to select that brand of equipment. If you're giving us a generic thing, generic monitoring probe for this purpose or something, then that's not something that we're probably going to ask. We're assuming that you're still yet to go through that procurement, that you're just giving us an estimate of what that might cost. In the case of you as states, you get to use your own procurement procedures. Our tribes will get that opportunity for awards on or after October 1st. To date, they've had to use the federal procedures, even when they've had their own procedures in place. But you as states, I believe most of your procurement rules predated ours, and so you got grandfathered in. So you just need to confirm that if you're putting a brand name in there, that you have followed your state procurement procedures to make that selection. If you are in the place where you know that equipment's going to be needed, but you maybe haven't been able to come up with an itemized list, recognize that we're probably going to have a grant specific term and condition in there requiring that conversation to happen before you make those equipment purchases. In reality, speaking honestly, we're pretty sparing with that particular grant specific programmatic term and condition. We would rather negotiate it on the front side and have it all ready to go when that award is issued, rather than have that term and condition lingering out there. So expect a few rounds of negotiation to try to get to that point of having that itemized list before award. And then again, we had that point of we can use those items that are less than $5,000. If your property management policies stipulate a lower threshold, we can use those. You just have to let us know. Allowability. Allowability is a very big factor when it comes to equipment. And the reason it gets difficult is because the life of the purchase, the life of the equipment often exceeds the length of the grant project. And so we need to make sure that it's documented accordingly. It is a little bit easier for those of you operating continuing environmental programs to justify that, because we recognize that there's that ongoing need. Even though this grant is ending, you're going to continue to implement that program. The situations where you need to be careful are programs like the Brownfields program, where it kind of sort of continues on and on, like the revolving loan fund program specifically, but it's not actually. So your 128A program is a continuing environmental program. Your bill funded 128A is not, and your RLF is not, and your cleanup grants are not. Those are project grants. And so the type of justification you have to write is for the boundaries of that funding that you're applying for, that the benefit, if you will, has to fall within the start and end date of the grant in order to justify its necessity and allowability and reasonability. It looks different for project grants than it does for those continuing environmental program grants. And because you as states operate both, You just need to recognize that. Your continuing environmental programs, it's a little easier to make that long-term argument for big purchases like vehicles, for instance. It's more difficult when you're trying to fund that with a project grant. And it may just be a way of documenting it in writing. This is, again, where I'm going to repeat the rule. If it's not in writing, it didn't happen. A lot of times it's a mutual understanding. Maybe it's something that you inherently know about your program and your PO because they're savvy and have worked in the program for a while. They also know that about it. But when it gets to your grant specialist, it's not on writing in the paper and we don't know that about it. When we ask that question, it may just be the case of trying to get it in writing. It may not actually be questioning the cost in terms of like, gee, we don't think this is okay. It may just be, we don't see the justification written down here and we need to make sure that it's written and part of the documentation that we have. So again, just recognize it's going to be a little different for your continuing environmental programs than for your other project grants. In the project grants, we do ask some of the questions, and we ask it of the continuing environmental programs too, but it comes up more in project grants. Did you consider rental? Does it have to be a purchase? It may be for some of those projects where you're going to need the piece of equipment once for that particular project and then never again. It may mean that rental makes more sense. And so those are the types of things that should be documented in your justification. Show us that you've gone through that thought process. Just be transparent. Just walk us through the thought process, make sure it's in writing, and it actually makes it much easier. If we don't see it there, it's usually just an email chain or a phone call that we document to be able to reflect that justification. Here's the kicker. Contingency reserves for equipment are allowable to a very limited extent, and we give you the CFR reference there. If you have them for major IT infrastructure projects or similar activities, they will show up in the equipment line. Please recognize that contingencies for things, for purchases like vehicles or other big expensive pieces of equipment that aren't like IT infrastructure are not something that we can dabble in. Our grant regs do not allow us to kind of have that rainy day fund or to save like we do in our personal budgets, you know, over the course of many cycles for a larger purchase. Unfortunately, we just don't have that flexibility in our grant regs. So just recognize that bullet point here. That can be very helpful in analyzing some of those big purchases. I know you guys live that. We remember the multi-purpose grants from a few years ago that some of you were able to take advantage of to get some of those bigger purchases made that maybe were more difficult to work into your annual cycle grants. Okay. Any questions about equipment before we get into supplies? Supplies is going to sound awfully familiar when we get there. Any questions about equipment? Okay, so next section then is supplies. Supplies are tangible personal property with a per item acquisition cost of less than $5,000. It's the inverse of equipment, right? If it's not equipment, it's supplies. If it's not supplies, it's equipment. The threshold right now is $5,000. The threshold for grants awarded on or after October 1st will be $10,000. The same questions we had to ask about whether the base component, if a base component costs less than $5,000, and then you have all these other items, you know, whether there's modifications or accessories and net invoicing, you have all of that analysis in the section for supplies, just like we did in equipment. So no matter which part you start in, you can get to the same answer. If it's required to make the unit operational, usable for the purpose it's being required for. And if the net invoice price is over $5,000, we're going to call it equipment. For the budget narrative in supplies, we want to know in detail why the supplies are necessary. Usually this is justified by giving us the major supply categories. I don't need you to tell me why you need pens, okay? It's okay to put off of supplies, I've got it. Computing devices might be necessary. Maybe you have it on a replacement cycle. Maybe you are staffing up and are going to need new computers. Maybe you had an unfortunate happening with lightning strikes and you need to replace a bunch of computers. Those ones are not as obvious as to why you might need to purchase one or more of them in a given budget cycle. So just there's a prudent person test again, right? Like if it would make you bristle a little bit, then it's better to put the documentation in the budget narrative. It's as simple as a sentence or two in a narrative note. Monitoring equipment is very similar. If we have a hard time, and this goes for both project officers and grant specialists, if we can't look at your budget narrative and figure out which elements or objectives under your work plan that it's supporting, it's more likely to trigger a question. And I would argue that supplies is probably the most difficult category to do that with. Again, office supplies is easy. Pens, paper, pencils, those are easy. It gets more difficult with computers and monitoring equipment. And sometimes it's just the difference between you on the ground who know exactly how that equipment is used, and it's just never been written on paper before. And maybe it's a new project officer or a new grant specialist or both here at EPA. Recognize that the benefit of documenting those things in your grant are good for the EPA relationship, but it's also good for you all. We've had some fairly significant turnover in our state programs in recent years. And we as EPA partners have fielded calls from you going, can you explain what my work plan means? And we do our best, but there are certain parts of that we just can't explain. Even if it's written down in a different document and you just want to cross-reference that, that's a-okay. Leave the breadcrumbs for those who come after you. It's infinitely helpful, and it's something that we will continue to talk with you about as we negotiate this next round of grants. When you are doing procurement for supplies, recognize that procurement procedures still follow. Mind you, most of these are going to be micro purchases if you're using the federal regs or you have some similar provision in your state procurement rules. Just recognize that they may be subject to procurement. This is one of the categories that is DBE eligible. Any questions about supplies? Equipment and supplies go pretty much hand in hand. Okay. Contractual costs, everybody's favorite, right? You as states have the luxury of using, with very limited exceptions, your state procurement statutes, policies, procedures for financial assistance, just as you do for those that you do under your state funding. That is provided for you under 2 CFR 200. It is not changing. What is changing in that same section of 2 CFR 200 is that you're going to see, instead of procurement for states, it's going to say procurement for states and Indian tribes. Our tribal partners will now be allowed, if they have procurement statutes, policies, and procedures written in place for their tribe, to spend federal funds just as they do on tribal funds. We will allow them to use their procurement policies instead of using the federal policies. If they don't have those in place, they will continue to use the federal procurement rules and guidance. So it does not change anything for you. Your provisions are exactly the same as they are, both before and after October 1st. They stay exactly the same for you. It's a change for our tribal partners. They get the same opportunity you all now have on or after October 1st for grants awarded on or after October 1st. The hardest thing about contractual category is determining whether the costs actually belong there. And here's where it gets complex. I want to step through this as carefully as I can because this is the most complicated, in my opinion, the most complicated policy that EPA has for grants is the subaward policy. Appendix A is your friend. Appendix A of the subaward policy is where I would go anytime you're dealing with one of these types of situations. And here's the deeper why. EPA doesn't say, well, the financial vehicle that my accounting office is using to pay this person is a contract, and so therefore it's a contract. That's not how we define contractual services. We define it based on a relationship, on a legal determination of the relationship. We're going to ask questions about whether there is a margin for profit as part of this agreement or whether it's being charged at cost. We're going to ask what type of organization it is. Is it a for-profit entity? Is it a nonprofit entity? Is it a university? We're going to ask all these questions because we're trying to discern the relationship between you and the organization. Some relationships are contractual, others are subaward, others are interagency services. And Appendix A of the subaward policy is the metric, the bar that we use to try to make that determination. When your PO and your grant specialist working together can't figure it out together, we call in our legal counsel here in Region 7. They are fantastic and stellar and help us sort it out very quickly. In the rare instances where they can't, Jim Drummond at EPA headquarters is our phone call. He has been around for many moons. If you guys have been to grants conferences before, I am almost certain you know Jim. And he is the guru of all things procurement at EPA and wrote the subaward policy. And so we call him because he can help us sort it out on a case-by-case basis. That's the other thing to remember about this determination of, is it contractual, is it subaward, or is it interagency service? It does matter what is being procured. And so it can be case by case, even if the last 4 times that you did business with that particular university, it came out as a subaward. It is entirely possible that this next time, based on the agreement, based on the relationship and the thing that's being procured, it might be contractual. The facts of the instance matter. And so just make sure that you've given your POs enough to be confident in the determination that you make. Because here's the other complex thing, and this isn't, it's in the 2 CFR 200 changes, but it's not like wide out loud, like written in crayon, super easy and clear. There is a pendulum swing on policy with OMB right now between whether we are worried about compliance or environmental results. Likewise, on the same pendulum, it is a question of whether it's EPA's job to confirm all of this or whether the burden of proof lies with the recipient and would be found in an audit. Right now, we are in a pendulum swing the other direction on both. We have lived in a world of compliance for several years, and we have a very hard swing right now from a policy standpoint into environmental results. You're going to hear us talk a lot about post-award monitoring, and you're going to see us step up our game on reviewing those reports that you send more thoroughly and documenting that in our systems and making sure things are on track and working with you to document as things are changing. Likewise, you're also going to see a pendulum swing of EPA maybe not asking as many questions about these things. Not that we're not going to do our due diligence during cost review, but we're going to trust that you've done the analysis and that when we call to confirm our analysis, you can kind of walk us through your thought process and you have it documented somewhere. The burden of proof is shifting to the recipients. The goal of OMB with these regulation changes is to reduce the amount of time it takes for federal agencies to get awards out the door. And that's a good and noble goal. It's also to make sure that we as federal agencies are consistent with one another in how we implement these regs. And that's a good and noble goal. What that means in some cases is that the burden falls to the recipient to make sure they're in compliance. That's why this document is going to be such a huge resource for all of you to continue to use, because you're going to be working off the same guidance that we work off of, and you're going to have the same cross links to things like Appendix A of the subaward policy to make sure that you're getting it right. When you put it in your budget narrative that it's contractual, that it actually is. If you put it in as a subaward, that it actually is. If you put it in as an interagency service, that it actually is. And there's a whole bunch of additional hints. Again, Appendix A is a huge one, but then there's other pieces of this guidance that will help you make that discerning call as to where to categorize it in your budget narrative for federal purposes. Recognize that once you've made that determination, you should briefly explain in the work plan and in the budget narrative how you got to that, why contractual costs are appropriate, why it's not, or to think of it another way, why it's not a subaward or an interagency service. You're going to be describing the types of activities, the scope of work, the services to be provided, how long it's going to be, the procurement method. Again, all those factors that come into play when determining whether it's a contract or a subaward or an interagency service. They're going to show up in your budget narrative, and we're going to be able to go, yep, they did the analysis the same way we did. It's not in writing. It didn't happen. Let's see here. The same provisions for contingency reserves that we saw in equipment show up here as well. IT gets a special provision, but not a whole lot else. Oh, consultant cap. This was the question earlier. So when you are hiring an individual consultant, when there's that one consultant that does something completely unique that no one else does, Or when you select a multi-person consulting firm, but you want that person to do your watershed management plan or whatever it is that you're contracting them to do. You need to be aware of the consultant cap. The way that it's calculated is spelled out right here. How to calculate it. It is based on senior executive pay levels at EPA of the federal government in general. It's not just ours. So basically, consultants cannot be paid per hour more than senior executives in the federal government. It's a way of making sure that consultants are not charging more just because it's a federal grant. That's the heart intent behind this. This is straight out of 2 CFR 200. The consultant fee cap is subject to revision. The threshold, the amount that comes to revises from year to year when OPM revises the salary tables for federal employees. Generally, that's around the beginning of the calendar year. Usually it's released sometime in like October-ish, and then takes effect in January with the first federal pay period. If you're hiring a contractor that's a multi-employee firm and they're selecting who works on your project, the salary cap does not apply. The consultant cap is not something you have to worry about. It's when you have a particular one-person consulting firm that you know is going to be the one that works on something, or when you are hiring a multi-employee firm and you want that employee to be the one on your project and you're going into it with that mindset. That's when you really need to worry about the consultant fee cap. There are lots of rules around meals and light refreshments, which can sometimes be contractual costs. Recognize that you as states who are operating, when you are operating your continuing environmental programs, you don't need prior approval from EPA to purchase meals and light refreshments. If you are operating a non-continuing environmental program, food in any form, meals or light refreshments, requires EPA prior approval. So remember which type of program you're running when you're thinking about your food rules. We're going to make sure basically that the meals are part of the conference. We're not going to be able to end a conference, for instance, with a meal. We're more likely to fund lunch than we are breakfast or dinner. I'm not saying breakfast and dinner are impossible. I'm saying that it's more difficult to justify that. Again, this is one of those situations because it's prior approval. You're going to work with your POs on how to address those questions, how to document things as allowable, but ultimately the decision is made by Whitney. Ultimately, the decision is made by the grants office. So your PO will work with the grants office to get that final approval on meals and light refreshments. A whole bunch of rules around meals and light refreshments. Those all came from a lot of examples of the federal government doing it poorly. Just Google $16 muffins. That's a case study for you. Let's see here. We've talked about that. Competition requirements, you follow your policies and procedures. So we're not going to go into great detail about the other things. The one thing to recognize, though, is DBE, the Disadvantaged Business Enterprises rules, do apply to you even when you are implementing your your state procurement policies. You will still be responsible for DBE reporting if it applies to your grant. Let's see, we can skip all of these micro purchase threshold things because you guys use your policies. You don't need our policies. Those are all just summaries of our policies. Okay, let me pause there before we get into the next categories. Any questions about contractual? Michael asked, what is the cap now? I'll be honest, I do the math every time. I don't have that number memorized, but we can pull it up quick if you want. Let's go back up. We'll practice using our links in the document. A little further. Contractual is a big category. Awesome. Okay. So we need OPM level 4 salary. So let's open an internet browser window and pull it over to the screen. You can find things the same thing we do. We go to Google and we're going to type in OPM. executive level IB salary rate. And we're going to get a table from OP. Oh, yep, that's it. Awesome. Oh, that's old. Hold on. Let's see if there's a better link there. Let's just go to their salaries and wages page. All right, we'll just use it as an example. This is not the up-to-date number. This is effective 2020. There should be one for 2024, but we can do the math, right? So overall, the salary level without doing the hourly rate would be 170K in this example. Again, this was the 2020 rate. I pull in my handy dandy calculator. Then we can type in that salary, 170,800, and then divide it by 2087. $81 an hour, $81 an hour and change. We round to the nearest cent. So 81.84 would be the consultant cap. If you want to do a daily rate, you take that times 8 hours in a day. And so we can't pay them more than $654.72 per day. This only covers the personal compensation. So the overhead, the travel costs are not part of the consultant fee cap, only the salary to that consultant. Does that make sense, Michael? Does that example help? Perfect. Awesome. And thanks, Whitney, for throwing that fact sheet in there too. There's probably a much better link there. It's linked right there as well in the guidance document. Cool. Any other questions about consultant fees or contractual in general?
Scott has a question.
Awesome. Let me.
Goes back to kind of the same thing I talked about earlier.
Yeah.
We see some of these consultant companies out there doing great things. They've already built relationships with people. They've already got their trust. And it's really difficult for me to see how we can put that into a request for proposal or try to, put this out for whatever and come up with the same product. It's going to put us so far behind if we don't find those kind of movers, shakers. And look, we have to be really agile and really fast in what we do when we're working at these 319 programs. So I don't know for sure if, I even made a suggestion to Region 7 non-point source guy. Maybe there's some way they could put some language in there in the next grant guidance that allows us to do those things a little more on the fly than, trying to be as regimented as we are. If you want results, we're going to have to go look for results doing a lot of different things than what we have in the past.
Yeah, I can empathize with the struggle that you're listing off. Like our federal procedures, your state procedures are often written to maximize competition, to not make it easy to select one particular guy who's great in that community, because the goal is to spread the opportunity to many, or to give the opportunity to many to compete for those funds. Your state regs and procurement policies are written very similarly to ours that way. So I can empathize with the struggle that you're saying, and I can recognize what you're saying in that as this policy pendulum shifts, that puts unique pressure, because you're caught between results as well as the policies you have to follow. Recognize, I think some of the creativity comes within your state policies. There are no standards at the federal level as to what those state policies look like. And I recognize that impacts more than your agency, right? It's not just your agency that follows those procurement policies. It's a statewide thing. I think there's a lot about the future that we have to kind of weigh. And I think those types of trade-offs are becoming more and more common, not only in your program, but in a lot of our environmental programs. I don't have a good answer for you, but I can definitely empathize with the pressure that is. And you're right to continue to advocate for clear definitions and things in your program guidance from EPA too, so that those conversations are easier when you take them at the state level too. Yep.
Yeah, well, thank you. And we'll, I didn't know for sure if we could actually talk about this at the policy level for the state first, or if we needed to go through and get your guys' guidance on it.
Right. So again, you're implementing so 319 is a continuing environmental program. You're
Okay.
implementing the state procurement guidance. And so no waiver that we would put through would change that for you.
Okay.
That's something you'd have to pursue at the state level if it's a procurement policy difference that you're trying to do.
Okay.
And if
Thank
that's
you.
the limitation, then that's what you argue to EPA as to why the results didn't happen, right? It's hard. It's hard.
Okay.
You guys are trying to do the right thing. I get it.
All right. Thank you.
Yeah. Other questions about contractual? Okay, let's briefly talk about construction. This doesn't impact many of you, but it does impact a lot of your local communities. And so I want you to at least know that number one, 2 years ago, this section did not exist in this document. Only when EPA got back in the business of congressionally directed spending, which is our fancy way of saying earmarks these days, because technically Congress banned themselves from passing earmarks. And so now it's called congressionally directed spending. They got back in the business of that a few years ago, and some of your local communities in your states are receiving grants directly from EPA for the purposes of constructing wastewater or drinking water infrastructure. A lot of these rules are things that we have had to revive from the last time EPA was in the business of this, and that was back in the 80s. So we're looking at it with fresh eyes and much more complex realities. And so the definition of what is construction is captured in here. The types of costs that would be in the construction category of a budget narrative are here. So again, there's like a whole section on categorizing the construction costs, where to put them, whether they go in construction or whether they go in contractual or whether they go in equipment or whether they go in other. Some of the things that are more complex for construction are land procurement. And that's because when you start, if you go through the acquisition process with federal dollars, the federal government has an interest in that land, a lien, honestly. And so it will impact disposition many, many years from now. And we have policies that are forthcoming that help us make sure that those procedures happen as part of the project. Likewise, if we are improving the cost of land from a real estate standpoint, it very much is guided by some of this as well. And so just know that a lot of that lays in. When you get into construction, you're also getting into a labor field that has union protections and also has some federal additional requirements like Davis-Bacon, which is a prevailing wage requirement. You also get into things like domestic preference statutes. Things like procuring American iron and steel. Those things will show up in the terms and conditions of the grant. For those who read those, kudos to you. They generally show up in the general terms and conditions as well as the programmatic conditions when they apply to your program. There are a handful of continuing environment programs like SRF who have lived this life for many, many years and who we have learned a lot from in order to add to this section. And we actually lean on some of those SRF rules for some of the definitions and determinations for the section. So again, it's a short section in this guidance document, but just know that it wasn't there a couple of years ago. And as EPA continues in this, I would anticipate continuing to see some changes in that section, not related to 2 CFR 200, but just related to the work that we now find ourselves doing. Any broad questions about construction before we move to my next favorite category? Okay, let's talk about other. First of all, other is a catch-all. If it doesn't fit somewhere else, it fits in other. Which is why when we see costs that are in other that don't look like they should be, we start to wonder whether there's good understanding of our budget guidance, and we might start to overthink it a little and look a little deeper on things. And so if you're getting questions about things that you put in other, it's probably just a need to document things a little more, a justification that maybe didn't make it into writing, but that you thought through in your head. And again, if it wasn't in writing, it didn't happen. It just didn't make it onto paper. Some of the things that are common in other, if they're not part of an indirect cost rate, are things like telephone services or capitalization funding for revolving loan programs, all goes under other. Tuition remission, scholarships, participant support costs, subawards, land acquisition, rental of equipment. Those types of things we find in other. Other is a catch-all. Some programs will list fuel for vehicles as part of other. Other organizations have good reason for putting it under travel. And again, the key is to justify it, to document why it's there, to be able to tie those other costs to the objectives in the work plan that they align with or that they help to achieve. Part of the way that you do that is that each item under other should have a line item and an amount. So your participant support costs may be a broad category, but maybe there's some that go to a community group for babysitting for a public meeting. Another is going to some sort of honorarium, if you will, for an advisory group that guides the program. You're going to list each of those individually and the cost associated with them so that it's easy to make that reasonable and necessary and allocable and allowable determination based on what you're providing in writing. If there's a logic or a need to explain why those costs are being incurred or what objective in the work plan they attach to, the budget narrative is a great place to do that. Sometimes all it takes is just like a narrative note, like almost like a footnote, if you will, and a couple of sentences, and it makes that connection super easy. Don't overthink it. Contingency reserves for construction and IT will show up in other sometimes as well. There's a whole section in this part of the guidance about rental and lease. None of this is changing as part of 2 CFR 200. This all stays the same. The justification for why you're going with a rental is usually where it shows up is in other, because this is where the costs show up. We're not going to put the rental costs as part of equipment. We're going to put them in other. And so that's where you would explain why you're choosing to rent. Participant support costs. Here's a big change. First and foremost, let's talk about that change. Prior approval for participant support costs will be removed for awards on or after October 1st. Currently, participant support costs are allowable with prior EPA approval. So if you have an active grant award or expect one to be issued before October 1st, so on or before September 30th, 2024, participant support costs are allowable with prior EPA approval. For awards issued on or after October 1st, 2024, prior approval is the responsibility, or excuse me, prior approval is removed. The responsibility for making sure that they are eligible and categorized correctly falls to you as the recipient. You are still responsible for complying with the requirements in 2 CFR 200, 2 CFR 1500, this guidance document, and the other guidance document resources for participant support costs. The good news for you, that's all cross-linked here. The 2 CFR 200 of participant support costs, the EPA regulations that expand that definition are in 2 CFR 1500. There's additional talk about the prior approvals. You'll see it disappear from that section on or after October 1st. And then there's a detailed guidance document on participant support costs linked right here. It's a fantastic guidance document. It is one of those that is also backed up with a Q&A document, an FAQ. When you see that, number one, you should recognize that it means there's a lot of case-by-case scenarios, a lot of what ifs to consider to determine participant support costs. And so it helps to see those other scenarios that are like yours. When we at EPA get stumped and have to ask headquarters about a particular scenario and whether or not it's participant support costs, it makes it into that FAQ. It's a living document. We keep adding to it. We have a similar document for the subaward policy. We have one for participant support costs. Recognize this becomes you all. that are implementing this on or after October 1st. You don't have to check with EPA before you spend the costs. That said, when you put them in your budget narrative, we're going to set you up for success. We're going to look at it and make sure that you've got it categorized correctly. The types of things that participant support costs are stipends. That could be registration fees for non-W-2 employees. That could be training materials and travel costs for non-W-2 employees, but where them going on that travel is beneficial to the program or project that you're implementing. It can be incentives paid to participants that participate in focus groups or surveys or public meetings or workshops or listening sessions. I mean, think of all the ways that we can call a conference. If you are paying people for their time in some form or fashion, it's probably going to be a participant support cost if they're not a W-2 employee. Subsidies and rebates are tricky and usually fairly specific to the program. So for instance, DERA has a section in this guidance talking about whether the subsidies and rebates qualify as participant support costs. 319 is special on this one. And so there's a paragraph on that. It also is echoed in the 319 program guidance. It's worth knowing your program well as you analyze whether or not it's a participant support cost. And then the requirements for allowability are all spelled out here. Again, the prior approval requirement will be removed. These rules will stay the same. The only thing that's being removed is that EPA has to say yes before you spend the money. It can be something that you put into your work plan and we, determine to be allowable, reasonable, necessary. But we may not be able to say like you shouldn't do participant support costs. If it makes, I'm trying to think of how to word that. I can word that better. Let me think here. If you're proposing to fund childcare at a meeting on or after October 1st, you can make that determination that it's a participant support cost and put it in that part of the budget. Prior for the grants that we're currently awarding, that's a conversation with your PO. That's probably the best way to do it. I'm not trying to discourage you from continuing to talk to your POs about that because you're still subject to all the same rules that we've helped you implement up until now. It just doesn't, if you're rebudgeting to cover something like that post-award, you can tell us about it in a quarterly report. You don't have to tell us about it before you do it. Again, there's a partnership component there that's difficult to capture in 2 CFR 200, and we're still working out really what that looks like. This is one of those big things that we will be looking to headquarters guidance to really help us understand how to move forward and implement this. But this is the best guidance we have right now. So as of right now, this is something that requires prior approval. On or after October 1st, it won't, and we're still looking at what that looks like. Lots and lots of comments about these. Notice how much room there is in this section about participant support costs. It goes all the way down to where the subaward break starts. So that's a lot. It tells you how complex the policy is. Again, use the FAQs. There's some great scenarios in there that are going to sound almost exactly like what you are. And if you have a factor that's just slightly different, that's what you pose to your PO to double check your thinking or pose to your legal counsel to help you determine. Subawards, I've already spoiled this. Subawards are the hardest policy that we implement. It's important to categorize appropriately during pre-award, and the reason is because subawards have additional reporting requirements that contractual costs and interagency service costs do not. Subawards are still procurement. Subawards, so they're still subject to your procurement policies to the extent that they play in that. They look a little different. But they are distinct because they require congressional reporting in the FSRS system. Those terms and conditions have been on your awards for many moons. They are part of the general terms and conditions. So if you click on that link and navigate to it, there's a whole scenario and system in there on how to manage subawards and what your responsibilities are for assessing your subrecipients and making sure that they are eligible and that they don't have folks who are excluded from federal grants. There's a lot of layers to subawards. They are not easier. They're just different than contracts. And it's all guided by our subaward policy and those terms and conditions. There's no change in the requirements for subawards as part of the change in 2 CFR 200. But as we talked about earlier, there is added emphasis on the recipient's responsibility to correctly categorize subawards versus contracts versus interagency services. That pressure is part of reducing the burden of award of these grants. That if you all are doing the analysis before you apply, then that lessens the burden of EPA in trying to get it awarded. Be sure to put your thought processes in writing. That's the easiest way to lessen that burden. Lots of scenarios about what subawards do and don't include. The policy will help you. And again, there's that link to that frequent questions. If they're available, by all means, use them. That's usually your cue that things get tricky. You'll notice this unique little footnote here at the bottom of page 37. It's not highlighted because it really only impacts 2 programs. But if you are part of the SRF programs, recognize that part of the subaward requirements do not apply to you, but part of them do. Read your guidance documents very carefully on that. If you have questions, excuse me, if you have questions, consult with your EPA project officer. We're happy to help. Recognize that the emphasis is on recipient responsibility. Even in the current guidance document, the 2 CFR 200 changes continue to echo that and push it a little further. I'm not foreseeing large changes to this. It may just be changes over time where should becomes must, or should, like, recipients should categorize things correctly. It may become eventually must. You never know where that pendulum will stop. So just, it's something to keep your eyes on. That's why we're bringing it to your attention now. Again, if you do happen to put it in the wrong category, if you list it as contractual and it should be a subaward, or if you list it as a subaward and you put it in contractual, we're going to ask to submit a revised budget under that pen and ink changes. Pen and ink changes in the 21st century means send us a revised copy of everything by email, because that is low burden in a paper, in a, excuse me, an electronic record keeping universe. And this gives you some great hints on how to document your justification for putting it in as a subaward or putting it in contractual. Let's see here. Again, that national subaward term and condition, subaward policy, Appendix B talks about a lot of the things. If you are working with a foreign government or international organization as part of a subaward, expect questions. We will have to run that up through headquarters. Anything international goes to headquarters. So we'll have to work with our headquarters folks on anything international. One thing that is changing, and I should have had a red mark here, there's an error I found in my own document. One thing that is changing related to subawards is that right now the definition of modified total direct costs governs some entities' base for their indirect cost rate calculations. Most of you, that's not the case. Most of you have some variation on a theme of personnel and fringe benefits counting as the base for calculating your indirect cost rates. Not all of you, but most of you. Some of you do use a version or the actual definition of modified total direct cost. Those of you who are using the de minimis rate use the modified total direct cost definition as the base for your indirect cost rate. So it's important to recognize that if that's you that uses the MTDC as the definition of the pool for indirect costs, this is going to change. Right now, you can charge up to the first $25,000 of each subaward as for indirect costs. You can include up to the first $25,000 for the purposes of calculating indirect costs. For awards issued on or after October 1st, that number increases to $50,000. So this will be a change. It will go up. Notice that it's of each subaward. That means your POs, your grant specialists specifically, because grant specialists are the ones in charge of calculating indirect costs and checking your math on that. We'll need to know how many subawards if they're part of your indirect cost rate pool. For some of you who haven't done the competition for those or haven't selected them, again, I'm thinking of 319 as a unique instance in this. Some states select them and then apply for the funds and they have all their projects listed. Other states make those selections after, like in the first year of the 3 to 5 year grant that they get from us for that. If base it as best you can. Estimate. We can always recalculate later. Your charge actual cost to the grant. And we have copies of your rate. So you should be, the estimate's probably the best you can do in those scenarios. But just recognize we're going to need to know approximately how many subawards you're going to be giving out, because we need to know how to calculate your indirect cost rate correctly. Again, before October 1st, $25,000. On or after October 1st, $50,000 for that calculation of base. Because we're already there, I'm going to finish talking through indirect costs. Each of you have, most of you, not all of you, most of you have negotiated indirect cost rate agreements with your cognizant federal agency, and we honor those. Some of you, because those rates are relatively close to what is issued as a de minimis rate, and we'll get to what that is in a minute, you have made a determination as an organization to no longer negotiate an indirect cost rate. That is your prerogative. The 2 CFR 200 allows you to charge indirect costs under several scenarios. You can either have, you can have any one of these options. So you could have a provisional rate, a final rate, a fixed rate with carry forward, a predetermined rate, or you can opt into the de minimis rate, which is codified there in 2 CFR 200.414. Right now, it is 10% of modified total direct costs is the de minimis rate. On or after October 1st, for awards made on or after October 1st, that rate automatically increases to 15%. So if your state agency is implementing the de minimis rate, you will be able to charge on grants issued on or after October 1st, 15%. New grants or grants with supplemental funding. Follow the terms and conditions of your award to know which one to charge. As of right now, it is not anticipated that all indirect cost rate agreements will automatically update to the revised modified total direct cost definition. So if that applies to you and that $50,000 increase applies to you for the amount of each subaward that can be part of your base, that will take effect when you negotiate your next rate with your cognizant agency. That's the general understanding we're hearing right now. We don't know all of the how yet, but that's the rumblings that we're hearing so far. So if that gives you a little bit of a heads up, hopefully that's helpful. But again, that's the big change under indirect cost rates, is that the modified total direct costs will change to $50,000 for each subaward as part of that calculation. And that's the end of the document. There are acronyms, the handful that we use in the document. And then for those who aren't already familiar, a lot of new folks ask us, do you have an example? Do you have a template? There is one in this document, an example budget narrative. And what I love most about this budget narrative is some of the examples on how to talk about your equipment purchases. And look, see narrative note 4 at the very bottom of the budget narrative. They have a bunch of narrative notes. And so it explains some of the nuances. So for instance, when the equipment threshold is different, they can add it there. They can explain why they're looking into purchasing rather than renting. They're talking about how it applies to the work that they're doing in their work plan. These narrative notes are great examples to work from. Notice how pithy they are. They really don't take a lot of space. It's just showing your logic in writing, because if it's not in writing, it doesn't happen. That's the guidance document. That's all 46 pages. You have this copy. You have this marked up copy available to you in the invite. Please feel free to share it with others in your agency. Would find it helpful. If you want a fresh copy that you can make your own notes on, know that you can Google interim general budget development guidance for applicants and recipients of EPA financial assistance, and it will pop right up. It's a fantastic document, and we do expect a revised copy of it to come out after headquarters finishes it, and that will reflect the revised conditions of 2 CFR 200. As a note, we also do expect that the general terms and conditions will be revised on or after October 1st. We expect that to come out before October 1st. As soon as we see those come out, so that you can start to wrap your minds around what the general terms and conditions will look like, what the terms and conditions on your EPA grant will look like for those new awards under the new 2 CFR 200, we will share that with you guys by email as well. We will continue to share what we have with you so that you have everything you need to go forward. All right. Well, if not, it is 3 o'clock. I will hang out. I'm going to stop the recording, but I will hang out for a few more minutes just in case people have additional questions. But thank you very much for your time today and hope you have a great weekend.